This is PropertyBT, a podcast of BT correspondents.
There were many positives coming out of the COVID pandemic. One could move around much more freely, including travelling abroad. Many segments of the economy rebounded. However, people renting homes were in for a nasty shock. Open market rents of both Housing and Development Board or HDB flats and private homes skyrocketed. Leasing rebounded, but there was insufficient housing stock. Fast forward to today, rents of HDB flats year-to-date continue to rise, but private housing rents this year are down on a year-on-year basis, as more new homes are being completed. Does bargaining power in the private homes leasing market today clearly reside with tenants? What can and should landlords do in this new environment? Welcome to PropertyBT, a podcast of BT correspondents. I'm your host, Leslie Yee, Senior Correspondent. Every week, my colleagues and I break down a business subject that matters. Today, we'll take a look at the private homes leasing market. To help tenants and landlords make sense of Singapore's private homes leasing market, I have Alan Cheong, Executive Director and Head of Research and Consultancy at Savills Singapore. Welcome, Alan.
Thank you, Leslie. Good to be here.
Clearly, the situation today in the private homes leasing market is not as favourable for landlords versus some time back. Meanwhile, I guess, tenants can be choosy and shop around to find a good deal. Alan, maybe you can help us get the facts right. What is the demand and supply like in the private homes rental market? What is your outlook for rents?
Supply-wise, I think last year we saw a deluge of new supply coming from the projects that were delayed because of the COVID measures. So we saw a hefty 19,000 units completed in the private residential side. This year, we are expecting about 10,000. So the supply side, it's sort of eased off in terms of the tightness of supply. On the demand side, although there are still incoming expats, but it is also partly balanced off by outgoers because, the economy is slow. And at the same time, there seems to be, on the cusp of a restructuring in the employment market. So demand is so-called stabilized, supply is a flood. So the outlook of the rental market is such that we believe this year we will get about a 5% year-on-year decline in rents.
So plenty of supply and kind of stable demand, and so you're looking at a 5% drop in rents. I suppose a tenant does have many options, right? He can rent an HDB home where the minimum rental period is 6 months, or a private home where the minimum lease term is 3 months, or maybe even try a co-living space. Alan, in your view, how do private homes compare with HDB homes and co-living spaces? Also, is there demand for, say, landed homes in the leasing market?
Well, there's definitely demand for landed because expats especially have large families and they also have the budget. They could be at the C-suite level or one level below the C-suite and they need the space. So landed homes will fulfill that kind of requirements. For HDB flats, they could be substitutes for private homes, especially in non-landed homes, because if non-landed apartments, condominiums i.e., rents shoot up too much, expats or foreigners who may not be on expat terms, they may find that they are priced out of the private market and so they head towards the HDB market. So these two tangle with each other, and today the private market has come off a fair bit since the peak, and the HDB market, because the rents are still rising, albeit slower, you will find that foreigners are moving back towards the private end of the market.
Interesting. I guess in the private market, generally foreigners will be looking at the condo market. So I wonder what locations are doing well. Are we still looking at prime areas such as Orchard, Holland Bukit Timah, River Valley, Katong being popular with tenants? Also, I wonder if there is much difference in leasing performance based on a property's age, facilities or size. Alan, what type of condo rental units are popular, whether by configuration, location, age, etc.?
We have noticed that of late, since the reopening after COVID, for the prime areas, aka Core Central Region, CCR, surprisingly, it's the 1 and 2 bedrooms that have been popular. In the past, it used to be the larger units where they appeal to expats with a higher budget. But today, I think people coming in general have either no families or no children, so they don't need a large space. And for that reason, probably the CCR, being close to the amenities, the American club, and also shopping belt, they may find the 1 to 2 bedrooms appealing. Now, moving out to the rest of the central region, the mid-tier and the mass market, some of these tenants back in 2022, 2023, the earlier part of last year, they were priced out of the luxury segment. And so they have no choice. They moved to areas like Joo Chiat to Jurong. Now, because it is such a dense landscape in Singapore, everyone is driven by budget. We find that today it is generally more difficult to get a tenant to agree on the rent that the landlord wants. It's a tenant's market because back in the days, say early 23 to late 22, a 1-bedroom apartment, according to some agents, had 130 viewings before it was taken up. Today, upon lease renewal, the tenant vacated. The agent said they only had 1 to 3 inquiries in the past 3 weeks.
Wow, it sounds a huge difference, 100 over viewings versus 1 to 3 inquiries, right?
Tells you volumes about the state of the rental market. There is no longer a shortage of supply. The market is not tight. And I think that is where we stand today.
So I guess in your view, bargaining power in the private homes leasing market, is it clearly with the tenants today?
Oh, definitely is with the tenants. It's that the landlords are still behaving as if it's the landlord's market. And I don't really blame them. When rent started to skyrocket in 2022, some landlords were left behind and they acceded to tenants signing back on at the same rent, only to find out that they have been shortchanged. Also, inverted comma, they were priced below market, way below market. Then in 2024, they try to play catch up. They think that the rents have gone up a lot and they ask for the sky. And consequently, may see tenants vacating and the units may be left vacant for 3 months or so.
Yes, I guess the landlords who didn't hike their rents, maybe they just felt a bit silly, I guess, and wanted to catch up. So how long does a private residential landlord need to wait to fill a vacant unit these days? Also, in your view, Alan, are tenants asking for more to be done by landlords, such as providing new aircons, furniture, etc., before signing or renewing a lease?
First of all, the tenant, if he's willing to renew, will probably ask for the same rent. Landlords may be able to pull it up a little bit by a fraction, like 5% more. And I'm talking about a renewal of rents that were first signed in 2022. And so we are back to 2022 second, third quarter rents. So tenants are now asking for the previous rent. Landlord may be able to up it a little bit. But if tenant vacates, viewers come in and try to lowball 10-20% below the asking rent. And the asking rent is not necessarily this year or last year's rent. Could be a 2022 rent. So definitely it is a tenant's market. And if the apartment is old, the landlord certainly has to do something about it because there's no shortage of new supply. So an aging apartment, we can't, as a landlord, just leave it in its bare condition or in its previous condition without any upkeep.
Indeed. So an owner of an older apartment may have quite a bit of work to do to make it rentable in this market today. Still to come, what yield can private residential landlords expect?
If you've been a fan of the podcast Mark to Market, WealthBT and PropertyBT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, Ben Paul, and Darren Wong. Because great reads should be heard. The BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to PropertyBT, a podcast of BT Correspondence.
Welcome back to PropertyBT. I'm Leslie Yee. Having to live and work outside one's home country means missing the comforts and familiarity of home. But hey, being an expatriate working overseas can sound glamorous. Think of drawing a fat paycheck, exploring a new destination, and living the high life in an overseas posting. I wonder, what is the tenant profile like in the residential leasing market here? Alan, you have been tracking real estate for over 3 decades. What has changed over the years with the profile of tenants in the private home leasing market?
Well, in the 90s, 2000 to last decade, tenants were mainly foreigners. They started off being foreigners from the developed countries, the Caucasians. Then in the past decade or so, there was a mix between South Asians and other Asians. Then coming to this couple of years, post-pandemic, we saw an increasing number of Singaporeans making up the tenant profile. That is quite surprising. And today, about 60% of the tenants are foreigners. 40% are Singaporeans or locals. And they are surprisingly single women wanting to move out. They have outgrown their homes where they live with their parents, or because sometimes there could be marital split up. So we see people trying to move out to their own abode. So we see a changing profile in that.
Alan, so indeed the tenant profile has changed. I'm surprised to hear about 40% or so are locals. As for the expatriates today, I mean, do many of them still receive generous rental housing budgets?
They get a stipend for a fixed amount, and then they make do with whatever they can with that. Some will not spend the entire amount that they be given, and so they scringe on the rental budget. They will prepare to probably even go to HDB. It is only in the higher level, international VP or the C-suite levels, that we get generous budgets. And to clarify the point, expatriates today is becoming less and less of a purist terminology. Generally, expatriates have generous housing allowance, and that also includes, say, tuition fees for their children. Today, that is a luxury. Most of them have that package built into their pay, or they can claim a certain amount of rental back from the company.
Yes, I suppose what we define as expat life may not be quite as glamorous as some of us imagine. We have talked about how the private homes leasing market is looking rather favourable for tenants today. Nonetheless, a tenant may need to do a fair amount of due diligence to find a good deal. Alan, maybe you can share some tips. Should a tenant go for a lease with a shorter or longer term?
Today, let's talk about the market now. Today, most tenants are asking for short leases, less than 12 months. The Singaporeans will ask for 3 to 6 months because they could be waiting for their new homes to be completed. And then the foreigners will ask for short leases because they think that the market will go down further and they don't want to be locked in at today's rent for the next 2 years. So the market wants shorter leases. Landlords, of course, want longer leases. And I tend to go with the argument of the tenant. I think because of job insecurity, job issues, it may be better to take a short-term lease.
So I guess, Alan, in your view, get the shorter lease to get the greater flexibility. I mean, on the converse, is it costly or not for a tenant to terminate a residential tenancy lease early?
It is costly if you sign a long-term lease and there's no diplomatic clause, meaning you are posted out or you lost your job in Singapore.
Right. Maybe you can just very briefly clarify what is a diplomatic clause?
A diplomatic clause is layman's term, means something that you insert into the lease, that you allow the tenant to break the lease upon certain conditions, such as the tenant gets posted out of Singapore or the tenant loses his job in Singapore. So the tenant then exercises the right to terminate the lease before the lease term is up.
Okay, very good point to note for tenants out there. So we have talked about a more challenging market for private residential landlords. Still, the dream of earning recurrent rental income from renting out a home here is very appealing. Conjure up images of enjoying one's retirement while lying on a beach and earning passive income from renting out a home. Alan, what yield can private residential landlords expect? What are the challenges a residential landlord faces?
The yields are pretty stable. It has improved a great deal since 2021, largely due to the rising rents. So yields probably range between the low 3 to high 3% in gross terms before property taxes, before maintenance and conservancy charges, etc., etc. Challenges are plenty, and one is if you happen to leave your apartment empty and it's non-owner occupied, for reasons that you need to renovate the house because it's getting old, or you ask for too high a rent and nobody's going to bite. then you will still have to continue paying conservancy charges. You still have to continue paying property taxes, and property taxes has gone up, as everyone knows, quite a fair bit this year, and that will eat into your effective income per annum. And if you have a mortgage ongoing, you still have to continue paying mortgages, and mortgage rates are still pretty high.
Yes, Alan, indeed, the non-owner occupier residential property tax rate has been rising, especially for pricier homes. Also, the annual value of many private homes have risen, and all this means much higher property taxes for some residential property owners. Add to that, with inflation, management fees in many condos have risen. In short, higher taxes and management fees eat into the returns of private residential property landlords. Alan, are higher property taxes and condo management fees a real concern to homeowners?
It is to some degree, especially on the property tax front. But beyond the property tax front, I think many of the condo owners don't seem to realize that on the cost side of it, particularly maintenance and conservancy charges, these will go up over time because of the progressive wage model. So from security guard to cleaning services to M&E services and even landscaping services, the guy is going to see his wage increase over the next 5 years. That will translate to higher costs. So ultimately, there is going to be this inflationary part that is going to be rising in terms of priority in the minds of investors.
Tenants, be smart and you can land a good deal in the Singapore private homes rental market. Indeed, you have ample choice as more new homes get completed. As for landlords, property ownership is a long game. Invariably, bargaining power between landlords and tenants can change due to economic conditions as well as supply-demand dynamics. Still, owning homes in Singapore is a solid long-term bet. Thank you to my guest, Alan Cheong of Savills.
You're welcome.
That's it for PropertyBT this time. Happy property hunting. Next week, BT Correspondents will be back with an all-new episode on markets, so do check it out. If you have any thoughts or questions about the show, email us at btpodcast@sph.com.sg. I'm Leslie Yee. As always, thank you for listening. See you next week. In case you haven't heard, PropertyBT is now part of the BT Correspondents channel. That's where we'll be posting our new episodes from now on. Go follow BT Correspondents so you don't miss out.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.